Well, to our next conversation. Now, Nigeria has raised $4 billion through Eurobonds, and this has been described as an exceptional performance and one of the biggest financial trades to come out of Africa in 2021. Also, it's been called an excellent outcome. The Debt Management Office, which has a reflection, says that this is a reflection of investors' confidence in the economy. Well, let's find out what Adeshola Sumoni, analyst with financial derivatives company, thinks about this and, of course, other issues in the commodities market. Good to speak with you again, Adeshola. Good morning.
Morning, Nini. Thank you for having me.
Great, good to have you. So this has been described as a sign of investors' confidence in the economy since it's even being oversubscribed. What do you think of this? Is it a sign of investors' confidence?
Well, there are a number of issues, but to start, we plan to issue 3 billion US dollars in Eurobonds,
And
but
now
there
we have
was
4 billion,
strong
yeah.
appetite. So we had 4 billion and it was oversubscribed more than four times. I think the book value was about, the book orders was about 12.2 billion. So I would say part of it is investors' confidence, but more importantly, it was the attractive pricing. I mean, we had a seven-year tenure of 6.125% per annum. We had 12-year tenure of about 7.37% per annum and 30-year tenure of about 8.25% per annum. So I think more of it was more about the attractive pricing, and also there's a strong appetite for high-yielding emerging market bonds. So I think those factors also played a significant role, also in addition to some form of investors' confidence.
Significant amount of funds to finance, projects in the act. Will this, can we expect to see some positive impact on infrastructure?
Oh, well, yes and no. So it is positive in the sense that, yes, we have some more ammunition, we have some more funds to finance, to fix our budget deficit and to help implement the budget. But whether let's say in theory, it will most likely, it could be used to finance some infrastructure projects. I mean, for the 2021 appropriation bill, the government, I think they're looking to complete some ongoing power and transportation projects. We have some rail project, the Lagos Kano rail project, the Abuja, and I can't remember where, but some rail projects that the governments are looking to complete, and some power projects as well. That's in theory. Whether it will be actually used for that is yet to be seen. I mean, if you look at the budget implementation report for 2020, we saw capital expenditure implementation of only around 59%. Meanwhile, recurrent expenditure, non-debt recurrent expenditure implementation was around 94%. And the recurrent debt servicing expenditure, no, debt servicing implementation was around like 97%. So that just shows kind of where the government's priority is, at least from last year.
All right, FX supply is a big one in conversations in these days in Nigeria. Do we see this making any impacts?
Oh, obviously, yes. I mean, it's good. That's $4 billion addition to our external reserves. So that is good. It will give the central bank some form of ammunition to further, help the FX market. Also, we had the SDR, I think around 3 billion US dollars. And because of the attractive raise and the attractive pricing and the strong demand, the federal government is looking to it's planning to raise some more bonds from the Eurobond market. I think around $2.2 billion. So I think it's positive for the external reserves. It will provide the central bank some more ammunition to continue to inject FX into the financial markets, and it will also it's positive for the exchange rate. It will help alleviate some of the pressures on the exchange rates.
All right, and JP Morgan's report on Nigeria's growth is pegged at less than 2%. Should we be worried here?
We need to read the tea leaves, right? I mean, the forecast, JP Morgan forecast, 1.5%, which is less than IMF's forecast for 2021, which is around like 2.5%. It's also less than central bank's forecast. It is also less than the forecast of the Bloomberg, a sample of 11 Bloomberg economists. And the key reasons for that are, one, the FX issues, the FX pressures. We also have like underlying economic weaknesses in underlying macroeconomic weaknesses. We have also the rising coronavirus cases, a third wave of coronavirus cases in Nigeria. And finally, the very, very slow vaccine rollout. Only around 1% of the population has been vaccinated. And the projections significantly underperform even Nigeria's population growth, which is around like 3.6%. So I think that there are a few things that the government can do. One is to try to, at least in the short term, try to elevate the FX liquidity, because that is constraining economic activity. Try to, elevate the FX liquidity and try to increase the vaccination rates. I know that we received around 4 million doses of I think AstraZeneca vaccine. So if the government can try to increase the doses, I know there's a lot of vaccine apathy also in Nigeria. People are suspicious, or there's a lot of also conspiracy theories about the side effects of the vaccine. But if the government can have some campaign to elevate the public, I think that would also help with economic activity.
Well, is it that vaccination rate globally now, not in Nigeria, that has brought about the gains in the global oil markets?
Oh, yes and no. The thing with the vaccination rates is that the vaccination rates kind of like stems the tide of COVID-19. It's kind of reduces the risk or the threats of COVID-19, and that is helping. That is helping also the global markets. But as of now, the other factors are driving the global oil markets are mostly supply side factors. One is production constraints in the United States. We have production shut-ins in the Gulf of Mexico, driven by the Hurricane Ida. Around 25% of the production are still offline, and many of the oil majors in that area they have suggested that these production shut-ins are likely to persist up until early next year. We have sharp drawdowns in U.S. crude inventories. Data from the American Petroleum Institute and the Energy Information Administration suggests bigger than expected drawdowns in U.S. crude stockpiles. And in addition to that, we also have OPEC members struggling to increase their production after OPEC shifted its production stance in July. I mean, Nigeria is struggling to increase its production. Angola is struggling to increase its oil production. Kazakhstan also, which is not an OPEC member but is part of OPEC Plus, is also struggling to increase its production. So all these supply side factors are supporting prices at this time.
All right, and the oil market is looking really bullish right now. What's your outlook for near term for prices of oil?
Okay, let me borrow an outlook from Goldman Sachs. They see oil reaching $90 per barrel at the end of this year. I think that's a little bit optimistic, and the reason they see that is because of, in addition to the factors I've mentioned, they also see the crisis we are seeing in the gas market. So because of gas prices are reaching like record highs, they suspect that we might be seeing some switch from the gas market to the oil market. So I think that is why they're forecasting oil to reach $90 per barrel. But I think that's a little bit bullish. That's a little bit optimistic. I think oil price will still trade between the range of maybe 75. I think $80 per barrel is fair game. $90 I think is a little bit optimistic.
I think we're still looking forward to $100. Well, anyway, please take us through the movements in the commodity market space.
I think a commodity in the spotlight, a commodity I'd like to talk about today is palm oil. So we've seen the price of palm oil in the global markets increase sharply, and you might wonder, why is that important? Because Nigeria used to be in the 1960s, used to be a very big producer and exporter of palm oil, but then Indonesia and Malaysia came and they took over, and now Nigeria is a net importer of palm oil. And now Nigeria's palm oil production, I think, is around 1 million metric tons per annum. Meanwhile, our demand is around 3 million metric tons per annum. So with the price increase, I think if the price increase persists, if it persists, then we might see an increase in the price of many of these commodities that use palm oil as an input, from pharmaceuticals to food to pastas to noodles. All of them would increase, and it's particularly important because palm oil is on the list of 41 items that are not able to access 40. Now I think it's about 45 items or 44 items that are not able to access FX from the official market. And given the pressures at the parallel market, I think that will also contribute to price increases.
Thank you so much for bringing us up to date on movements in the commodities market, and enjoy the rest of your day.
Thank you.
We'll take a moment now. When we come back, we'll head to the markets. To stay with us. Let's do an opening call to the markets now. Willie Bong.
Ini, it's a bright day, but the equities market seems to be dawdling, taking its time to bounce from the deep as the all-share index move further down by 0.05% to 38,852.69 points. Still struggling to make its way back to the 39,000 level. And the biggest culprit here for the pullback is still the banking index, which was down again yesterday by 0.83%. And this is due to the sustained profit taking in that sector. We also saw a dip in the volume, value, and deals at the close of trading yesterday. Performance for the key sectors was mostly positive, except for the decline in the banking and consumer goods indexes. Now, UAC Nigeria was responsible for the pullback in the consumer goods counter. The bull run continues at the unlisted OTC markets. We see that the NASD index climbed higher by 0.76% in yesterday's session, from 0.72 recorded on Tuesday to 742.97 points, and 4.89 billion naira was added to the market value. Overall turnover was also increased at the close of trading yesterday. The big eye catcher here was the jump in the total value of trades, which rose by more than 600% to 428.56 million naira. And we're seeing that from about 60 million naira that was traded on Tuesday. We begin to see a steady bounce in the NASD market, all thanks to bellwether stocks, Friesland, Campina, Wamco Nigeria, Double 11 PLC, and Central Securities Clearing System PLC. Now to the fixed income market, where at the bond market, we saw some demands across the curve, and interest was in the short, mid, and long ends of the curve dominated the trading session. And we have Caleb Alimi, is the fixed income dealer at FSDH Merchant Bank, is standing by on the phone to tell us the outcome of the bond auction that took place yesterday. Good morning, Caleb.
Good morning.
Caleb, great to have you this morning. Now, quickly give us a summary of yesterday's bond auction.
Okay. Yesterday's bond auction, the DMO had offered 50 billion each of three maturities, the 2028, 2036, and the 2050 papers. And then we saw a total sale of all of those bonds of about 237 billion, 42 billion of the 2028, 115 billion of the 2036, and about 118 billion of the 2050. All were sold at a maximum rate of 13%. We noticed that the 2028 and 2036 papers maintained their stop rate from the last previous auction at 11.6 and 12.75 respectively, while there was a 20 basis point jump in the stop rate of the 2050s from 12.8 to 13%.
Oh, that is quite interesting, because there appears to be some similarity here with the NCB primary auction that took place on September 8th, where the CBN increased the stop rate for the one-year paper by 40 basis points to 7.2%. Are we seeing a pattern with long-dated instruments issued by the government?
No, it's too early to call it a pattern. This is the first time that we're seeing the DMO maintain stop rates at the mid to short end of the bond auction, and then increase the rate of the longest paper. So let's just say it was just market reality. It's too early to call it a pattern until they repeat itself maybe 2 or 3 times, like we have in the Treasury bill space, where the 91-day and the 182-day, have kind of been pegged, whereas the 1-year paper has been moving. So it's too early for us to call it a pattern for bonds.
Okay, so also we move on to the where the DMO had a successful run, raising $4 billion through Eurobonds. It was dubbed one of the biggest financial trades to come out of Africa in 2021. What happened there, and what does this mean for the government?
Also, that was a very fantastic story and a fantastic outing by the DMO. Interestingly, FSDH Merchant Bank played the role as financial advisors to the deal. Like you mentioned, the DMO came to the market to raise about $3 billion. But the order book peaked at around 12.2 billion, which was about 4 times oversubscribed. The DMO proceeded to raise about $4 billion of 3 different maturities, a 2028 paper, a 2033 paper, and a 2051 paper, at a maximum rate of about 8.25% on the longest end of the curve. What it means for the government is that they've been able to raise significant portion of the deficit budget, which was earmarked for foreign borrowings. At the beginning of the year, they had said they would raise about 2.2 trillion from the offshore markets through Eurobonds. And then with this successful auction, they raised about 1.6 trillion. The rest of the balance will be raised through bilateral and multilateral arrangements. So it's a win for the government in the sense that the deficit budget has been largely closed.
Thank you so much, Caleb, for that insight. That's Caleb Alimi, fixed income dealer at FSDH Merchant Bank. We move quickly to the Treasury bills market, where the market closed flat as the average yield was unchanged at 5.5%. Elsewhere, we see that the almost segment, the average yield expanded. That is, it rose by about 9 basis points to 6.4%. So we begin to see a great number of inflows, especially with the Eurobonds coming into it, and then we'll probably see better liquidity in terms of the FX market. And I'm hoping that next week would have a good run as well. So, Ine, back to you.
Yeah, well, when you talk about the Eurobond, the $4 billion Eurobond success, I'm telling you, we're going to celebrate that for a while. And we're also expectant and really anticipating some really positive changes, especially in the FX supply.
Sure.
That's really important. Well, thank you so much. We'll enjoy the rest of your day.
It's Ine.
So we'll take a quick break now. When we come back, we'll do an opening call to London. Do stay with us. It's Business Morning on Channels Television.